The views expressed in the following show are of the host, the guest, and the callers. The content of the following show, its accuracy, authenticity, and the ramifications of the use or application of said content is the responsibility of those speaking and listening, not the broadcast medium. All right, we have with us Lional Parkinson. He is a guy who has been on here talking about the Holy Virus book that he wrote, which is a completely different topic than we're talking about today, but I highly recommend people read it. holyvirus.com is the way to find out about that, and that's that. But what he did also is he came to me and said, here, I've been doing this stuff. I've been studying the markets in gold and commodities and whatnot for years, and I want to offer suggestions to your listeners based on his work and his successes and warnings and so forth. So he wanted to offer this. No strings attached. He doesn't have a newsletter. He doesn't have he's not going to benefit if you follow his advice in any way. It's more like, hey, I found this out, and I want to share with the average Joe out there, and Jane, that this way, for a very short amount of money, like $10, $15, $20, you can buy into a electronic trading fund, an ETF, that will allow you that when the market crashes, and notice I say when as opposed to if, these go up hugely, and they have in 2008 when it crashed, some of these funds were over $100,000, and now because the market has taken off like a rocket, they're down into the $10, $12, $13 range where everybody can buy at least one and keep it for a rainy day. And if it does storm, it's going to be a cataclysm. These items will go up into the six figures. So I look at it as insurance, not an investment per se, because you're betting on all hell breaking loose. So if you become a millionaire in the process, you're going to be also in a semi-post-apocalyptic world if it gets bad enough. But Lionel also has mentioned that there's going to be a crash and then a go up again, and then perhaps the big one, that this crash that's coming is very large, bigger than 2008, but it will recoup, and this is what we're talking about. What can you do in the short term? We have many videos are out there, I'll get to that in a minute, already talking about these things. This is going to supplement and augment those, plus what's the new additional information that you can do. The important thing is that you protect yourself from the crash. This is not about making money. It's about having an insurance policy. I mean, for example, you have life insurance. You don't want to die to make the money, right? But if you do die, the people behind you are helped. And this is what basically we're talking about here, not to gloat or promote a crash in order to we get better. This is not the point. And since you can buy a couple of shares for, 2 bits, this is the point that the average person, everybody watching this show, can go to Ameritrade or some similar group, get an account for free, buy these stocks, these ETF funds, and just nothing happened. And all of a sudden we go into some golden age of wonderfulness. You lost $10. But if it crashes, and all indications, even in mainstream, are talking about it, you'll be able to have something. And then, of course, at that point, you have to get the money, make it available, move it to accounts. So it's not that we're not buying a lottery ticket here. It's going to take some work, but it's easy to look into. Anyway, with that big intro, let me bring Lionel in here. Hold on one second. Where's the button? Here's the button. Lionel, thank you for being here. Welcome back to Feet to the Fire.
Hey, thanks. I tell you, when you asked me to do this program, I wasn't quite prepared or ready, but I can tell you after doing some research just last night, I'm going to make an announcement on your program that will, I think, shock everyone. And I think this will not hit the main headlines until at least a week or two out, maybe even a little bit further. But the timing of this program is very, very good, and I'm glad that you asked me to do this because now I'm all excited about it. So I really want to thank you very much for allowing me on this program.
And when we started to talk about doing the show, this information, which we chatted about a little bit before I started recording, just happened. I mean, this information just came available. You've noticed it, and so we plan to do the show without this information, which would have been good enough in itself, but this further supports some of the steps that you're advising people do. And again, I reiterated, if you heard me as I was talking, you're not making anything on this by people participating. You don't have a newsletter. You're not selling a fund, or you're not doing anything that you benefit by other than you're just sharing your information to try and help people, this particularly the average guy who can't go out and invest huge amounts of money, just to give them a little something to get through the crash.
Yes, and it's very important that we know what is going on right now, and because what is going on right now in the markets is a total reversal in the global market. For right now, we've seen the top of the market at, speaking specifically on the Dow Jones, it hit a high of 26,600, which is a phenomenal number that the central banks and all the borrowed money that the corporate companies have borrowed to pump this market up and produced what I call the typical pump and dump technique to arrive at in an economy that has not really followed the stock market upward. So what we have right now is a total reversal in the markets. They are coming down. They are going to crash. And the news that I'm going to release on your program will not hit the mainline news line for several days. But this is really exciting. What I found last night is going to confirm what I said at least actually a year ago on your program, getting people ready for this, and it's happening in real time. And we're catching it on this March 25th of 2018. And the timing, like I say, is very good. It needs to be talked about right now. And so let's just get into it, all right?
All right. I was doing some work here, preparing some of the video aspects of it. Yeah, so that what I want to do at this point, let me just go do this. I have to find it now. How did I do? I got all this data up here, and now I'm going to have to play through. For people who would like to hear earlier shows, Lionel has been on the show many times, and I mentioned the Holy Virus, which is you can see on your screen. But if you notice some of the other visits, gold is not safe, ? This is from 2012. You have negative interest rates are coming. Now, people would argue, because interest rates are actually going up, but you can watch that show and see the rationale of all this stuff. How to make money or save your money, I should say, either way, during negative interest rates. Those are earlier shows. But I want to point to these latter two because they are the more important ones we're talking about. Protecting your cash from a crash. And then the next show we did was surfing the big crash. These are all have to do with what we're going to be talking about, and there'll be more detail in there on various topics. So it's like you can look at these three shows going in tandem, and when you watch them, you'll have a three-dimensional view, so to speak, what we're talking about, and that this show kind of builds on those. We'll repeat stuff, of course. You know, it's going to be a standalone in itself, but I just want to bring up those places. To find that, you just go to actually, you go to my website, feettothefireradio.com, and there's a button off to the side, or a link, I should say, for the YouTube channel, and then scroll down and look for Lional Parkinson in the playlists, and that's what you're looking at now is the Lional Parkinson playlist of the shows that he's been on. There's actually been more shows we have, which has been done in audio only, And there's links to go to the old website, and you could type in Lionel Parkinson, note the spelling, and you can find his audio shows. In fact, I'll put them all down in the bottom when we're done with this in the links section. So, all right, back to you, Lionel.
Okay. Yeah. You mentioned briefly that they have recently raised interest rates over the last period of about a year, maybe a bit longer.
All right, hold on 1 second here. Let me stop you because the phone is doing a kind of a weird thing where you're doing a phasing. So I don't know if there's a better place to be wise, or if you put it by your mouth, or if I don't know what you're doing. So sometimes it's hard to understand because it's going like in and out of phase. Generally, that means that either the sound coming into your mic isn't strong enough, or the signal itself is wavering, and so it has to crunch down the bandwidth of the value of the frequencies to get it to work. There's the technical aspect of it, so you can apply as needed. But go ahead.
Okay. Are you hearing me okay right now?
Yeah, it's still doing this phasing thing, but I can understand it. So if it gets bad, I'll interrupt again.
If not, we can switch to the other phone device if you feel it's necessary.
Yeah, it's not great. I'll be honest with you, it's not a great sound, but I can understand what you're saying, and if people listen, they can understand as well. So if it gets too bad, I guess I'll mention it to you. Go ahead.
Okay. Well, I'll just try and talk as good as I can. I think I'll just get to the point that what I found last night, and listening to a lot of other programs.
Hold on, Lionel, I got to bust in here. It's pretty bad.
Okay.
So let me call you back on the other line, and if something goes wrong with that, we'll go back to this. Okay. So just hang up. I'll call you right back, and everybody listening. All right. So this is a recording, but it's done live, so there's no editing. This should this should prove it. Naturally, a more professional view would be to edit out this stuff. But again, I like the liveness of it. It kind of proves that what we're doing here is not some kind of flashy deal here. So, Lionel, you there?
Yes. How's that sound?
100%, 100%, I don't know what the exactly would be, but it's way better.
Okay. All right. We'll just get into it then.
Okay.
That sounds good. What I discovered was in listening to other programs and trying to find something that somebody has to offer that might be beneficial, I found nothing. So I went back to my old notes and discovered that if we're going to have a real crash in this stock market, it will have to be a banking issue like they had back in 2008 with the Lehman Brothers. And that is what started the financial crisis back then. And this was right around the fall, almost during the time that Obama almost got into office. It was like right around September at this time before the November elections. Anyway, when this blew up, Lehman Brothers, it tripped all the major financial centers around the world because they were all interconnected with their derivative programs that they had going. And by studying that old chart under Lehman Brothers, I discovered that right before it dropped from $13.75 down to zero and created that mess. I picked up the Deutsche Bank chart and looked at it just last Friday, and it too has the same exact decline that Lehman indicated in their chart. In fact, it closed at exactly the same 1375 mark that Lehman's did right before the crash. Now, to give you an idea just how large the Deutsche Bank is exposed to. They have what I wrote down 5 problems that they have going on right now.
Hold on 1 second there. Let me jump in there. I have on screen Deutsche Bank, and if you look in a 5-year span, you can see it went from a high of 42 to currently at close it's 1378. Okay, now let me cut back to 1 month. You can see the dramatic down call in 1 month, and I'll go to a 5-day, and you can see the giant stair steps downward. And in 1 day, the last day, you can see that in after-hour tradings, it's continuing to go down, though there's a little bit of a loop up. But you can see in this, and in the 5-year, and if we want to go max, the maximum that it was before the initial crash, the crash that happened in 2008, it was at 120, 119. And it crashed at that point. When it went during the 2008 crash, it went down to 1663. That's during the last crash. And currently, it is 13. So I'm just giving you some stats to back up what Lionel is saying, though I'm sure that's where Lionel got his information by looking at the stats. But go ahead, Lionel.
Yeah, the interesting information I found about what's going on with Deutsche Bank in real time now, especially last week, is that it gapped down 4 times in a row. That means it gapped after it ended the closing day, the previous day. The next morning, it would gap down without even starting where it left off the previous day.
Right, I'm looking at those right now, and they're complete falls. I mean, that's like a stair. It goes boom. It goes all the way down. It leaves at 1552. The next day, it starts at 14. And then the next stair step was at 1479. The next day, it goes down to 1424. You know, and as you could see, people watching on the chart, and those who are listening to this in audio, all these links will be placed in the Spreaker directory. So go ahead, Ian.
Now these gap downs that you're seeing on the chart are what I call a stock that is in free fall. But this is not just any normal, ordinary stock out here. This is the German bank. And to show you just how large this is, the Deutsche Bank exposure to derivatives is 20 times the German gross domestic product. And it is 5 times the entire Eurozone. Its leverage is like 29 to 1 in leverage, and it has a derivative exposure of $47 trillion. Now, their problem is there's no way for me to find out how much they're losing on their derivative trades, but there is a way to find out in their falling sales and their quarterly exposure, and they're losing money according to their falling sales every quarter. Their rising costs are eating them up really fast. The multiple fines from the International Monetary Fund for repeated market manipulations. They've got over 7,000 litigations and lawsuits, including sanctions, and a $14 billion record lawsuit from the United States alone. Now, this is next piece of information I'm going to release on your program is the total. It tells me exactly that Deutsche Bank is going to blow up, and it hasn't hit the news lines right now. But this bit of information tells me beyond any shadow of a doubt, this is what's causing the stock market to crash, and all the stock markets around the world crashing right now. This has nothing to do with the raising of the interest rates by a quarter point that they did last Wednesday, and it has nothing to do with the Chinese tariffs that Trump has imposed, and vice versa, the Chinese tariffs on this country. So this is what's going on behind the scenes with Deutsche Bank. There's a particular fund manager by the name of Ray Dalio, and he controls a $160 billion fund. And he says the market is in a classic end of cycle swoon. This is what he just said just recently. Ray Dalio has recently bet short $22 billion on the European stocks and $7.3 billion short position on Deutsche Bank. Now, this guy has inside information, and I know that I don't have inside information, but when I dug this out and looked at the balance sheets of Deutsche Bank and looking at their stocks and noticed that the stock market is now just turned over and reversed, and I'm seeing these massive short positions going in against Deutsche Bank. This is telling me something big is going to hit the headlines here very shortly, much like the Lehman Brothers announcement back in September of 2008. This is the reason why I came on your program a year ago and told people to get involved with if you're going to take a poor man's insurance policy out, this is what you'd want to do. You'd want to short the FAZ, which is the financial banks around the world, the U.S. banks and around the world, and it allows the poor man to get an insurance against a financial collapse that I believe is going to be announced here very shortly. The last financial collapse that we had caught me off guard. I had absolutely no idea.
Well, let me stop here for a second, and I can bring up the max. And it's going back. I have to go back at the end of the chart, and I want to show that the last collapse, it's hard for me to do, but it goes back to the 2008. That's the last collapse we're having here. And on this particular chart, the FAZ, the stock that we're talking about was worth, and I can't, $116,000. Now, it actually was higher, I think, but it only goes back 5 years to this point. So $118,000 stock. It's not a stock. Fund? How do you, electronic trading fund? You're a share. It's a share of a fund, right? Is the way to say it, Lionel?
Yeah, it's a highly leveraged fund that takes an index of financial banks, and it's nothing more than a futures contract against multiple amount of financial banks around the world, especially the U.S. banks. So it bets on the index of financial banks
so the
as
idea,
they go down in price.
And the idea of electronic trading fund is that because it would take a lot of money to be able to do this on your own, somebody does it and then sells shares so that people can get in, like me and you. So now that was back in 2008, November 17, and that's as far as the chart goes back. So if I can bring it up to, this is what's happened in the last 5 days. Now, granted, the amount, it was at $10, and now it's at 12. All right, so you say, oh, wow, you made $2 on a share. But that is in the last 5 days, and it will shoot up. I guess the word would be logarithmically. It will go up very fast as things go down very fast. And so right now it's still a good buy at $12. And I know they say past performance is not indicative of future gain, but when you're dealing with the math here in the banking stocks crash, this will skyrocket. And again, it's not meant to be an investment in a moral sense because you're betting on the collapse of everything. Well, if everything's going to collapse, without we know that you can do about it, you might as well try and protect yourself. But go ahead, Lyle.
Yeah, and I still recommend that a person pulls their physical cash out of the banks as the number one option, and not so much bet on a short position on the banks. By pulling your money out of the banks that I believe are going to lock up here very shortly, because of this Deutsche Bank announcement that has not hit the news lines yet. I don't know when. I just can tell you by the evidence that I've just laid out on your program that there is no way that Deutsche Bank can be saved. It is dead. It is like a dead carcass that is a bunch of vultures that are coming in and eating the carcass right down to the bone. And that is why you're seeing these gap down losses on its stock price on a daily basis. And it is on Friday hit the same low right before the collapse that Lehman Brothers had 10 years ago. And when I see massive short positions being placed by the biggest hedge fund manager in the world with a control of a $160 billion fund laying this type of money down, this tells me he is absolutely positive that Deutsche Bank is going to implode and be soon to be announced insolvent. And how this affects other banks around the world will be a lot larger than what Lehman Brothers did. And that turned out to be into the tens of trillions of dollars of losses. So this is big news, and based on this evidence, I'm saying on your program, Deutsche Bank very shortly on the news lines will have to make the announcement that they are insolvent, and this will precipitate the crash in the stock market even worse, and we could see literally thousands and thousands of points being taken off the Dow and the NASDAQ very, very quickly. And while these programs that I was listening on the internet of other people claiming that you can buy the dips when they're not privy to this little bit of information, will leave them totally wiped out if they try and buy the dips like they have in the last 10 years. That has worked for them for 10 years, but it isn't going to work for them now.
Yeah, well, this is not a dip. This is a dive off a cliff. So buying a dip is fine, but when the dip becomes a crash, that's a different story. You don't buy the crash.
This is what sucks the liquidity out of the world markets, is the fact that all the borrowed money that has been borrowed by corporations and all the money that has been funneled into the banks, and the banks like Deutsche Bank has exposed themselves to $47 trillion of betting, is indicating to me that they are losing money hand over fist, and their stock price is losing money every single day, and their actual business model is losing money every day. So all these things that are combined together is telling me that they are going bust, just like Lehman Brothers did right before they tripped the other banks. So it would be very, very wise for the person out there that doesn't know this news, like this news is going to come out, I believe, very shortly, within weeks. It would be wise to pull their money out of the bank and hunker down, because this is for real. This is what I talked about a year ago. This is what I believe could have happened. I believe it is now going to happen. It is not a figment of my imagination. The stats that I'm looking at and releasing on your program are real, and you need to take this serious, because this is going to take the stock market down a lot further than what any analyst is predicting.
Now, let me just interject when you say about holding cash. If you listen to the other shows, it goes into more detail, so I'm just going to make it a statement here, and then you could listen to these others, watch them, is that the idea with having the cash at home is the dollar is divided into two things. The physical dollar that you hold in your hand, and I guess I should have had one with me for this video, and the dollar on paper, which is in your bank account. It's a digital electronic number. It's a number. It doesn't exist. It's a number. And so what happens when the banks close during a crash, as it happened in a smaller amount in Cyprus, was it Greece, or I don't know if they actually have a bank holiday, or Madagascar, Ireland. What happens is then your ATMs won't work and your credit cards won't work. So then what do you want to go buy with? Well, people say gold. Well, yeah, okay. Gold will work, especially in the long term, in terms of rebuilding society. But in a short-term sense, the system is already set up to take cash money and or digital money. So you go into Walmart, of course, eventually Walmart will be empty, but who's going to buy anything? It's going to be someone who walks in with cash. So what we're saying here is to take your cash, keep it short-term at home, so that when there is a crash, you will be able to go buy stuff because the digital part of the system won't work. And that along the way in this initial days of the crash, you will be able to buy, 2, 3, 4, 5, 10 times more of what you could have bought with that dollar because no one will be able to buy, other than somebody robbing the place, And so this is the concept of supply and demand. There's products to sell. The only way you can buy them is going to be a dollar. And if you have gold and you want to go convert it, and you can't go to Walmart with gold, all right? So if you want to convert it, you got to go to the guy who will buy it from you from dollars. He, of course, is going to give you a low price for it because now he's in supply and demand. He's got the dollar bills. You have the gold. So this is the point. It's a short term we're talking about here, not like long term. We're back in caves and we're starting over again. This is where gold will come in handy because historically speaking, people believe in gold. But short term, the system is not set up. Now, if you're in a small town where it's not uncommon to deal with gold, it's still going to go down in value because the people are going to want commodities. You can't eat gold. You can ask Midas about that, King Midas. But back to you, Lionel.
Yeah, I think that in the past I've made more money in the gold and silver market than the experts have, and I haven't touched the gold and silver market for practically since 2009, 2010. That's when I got out of it because I got out with a very good profit. But anyway, I am seeing a open door to get back in the gold and silver market, but that's after this crash has hit its bottom, because I still believe that the dollar will temporarily go up in a crash and your commodity prices will plummet, just like they have in the past.
I also want to throw in here, not to interrupt you, but and you might have been you might have been going to say this if I had been more patient, but also the idea is that when you need liquidity to pay your bills, to buy stuff, you tend to sell off the commodities to get dollars, to get to do this stuff. So people will, even when it comes to cryptos, in a short term, in a crash, people may sell off their Bitcoins, for example, to get cash to go do the things we're talking about. And so it's, even though I'm not ruling out cryptocurrencies as being something in the future as being a currency that's going to be used, we're talking about if you have liquidity at home, you can keep your gold, you can keep your Bitcoins and see what happens on the other side, but you got to have cash. And a lot of people might be forced to sell their Bitcoins, their gold, to get cash in a short-term sense, what, of course, will drive the price down dramatically. Back to you, Lionel.
I think that, yeah, you bring out a very important point that I'd like to make a highlight on or add to it. Back in the year 2000, the exchanges allowed a new gold and silver electronic trading funds. They brought those online, so it allowed now people to buy gold and silver on paper and not have to take physical possession, as opposed to prior to 2000, whenever you bought gold and silver, you would just buy it at a coin dealer or any gold and silver dealer and take it home physically. By buying it on electronic trading funds, you could essentially buy it without taking physical possession, while the so-called gold and silver was housed in warehouses for you, so you could get trade in and out on a daily basis if you wanted. The problem with that is it boosted the price of gold and silver in such a way that it's actually inflated it as the money was coming back into the market by the Federal Reserve and the central banks around the world, and the corporations were borrowing money and doing their buybacks of their own stock programs. This kind of lifted all the stocks and all the commodities together, giving us a blow off tops in the commodities. So when this liquidity is going to be sucked out, based on this bit of information that I released on this, March 25th, 2018, with Deutsche Bank going out, liquidity is going to dry up around the world really quick, and this will drop the price of gold and silver and even Bitcoin. And I suspect that we are going to see a massive drop in these areas, a lot further than what people suspect. Now, I'm just going to throw out some numbers, what I think will happen. I think gold could go down as low as 500, maybe even lower if this thing gets really serious. Silver would be right back down to $6 an ounce. Bitcoin, at least 4,000. And this is only going to precipitate and go down lower until the central banks intervene again with more quantitative easing, and they're going to be forced to go into negative interest rates, as I have predicted on your program in the past. They have only incrementally increased interest rates because they knew that this day was going to come, and they wanted some wiggle room to come back down, and they could not raise interest rates fast enough without crashing the markets. So they ended up with what we have right now is very low interest rates, and they're going to have to go massively into negative interest rates to try and kickstart the market again, or the economy. And this is why when we did that program a year and a half ago, I made that prediction on negative interest rates, that this event was going to occur, and it's going to force a major intervention by the central banks yet again to save the so-called credit meltdown from totally wiping out the world economies. This is going to be just right around the corner. I don't know how long they'll wait, but after the banks lock up and supply lines dry up, they're going to have to do this all over again. And that's, if they don't do it, then it's the end of the societies as we know it. But I believe that they will do it and come in and pretend to be our saviors yet once again.
And that once again means that the next time they won't be able to. Is it possible they won't be able to this time? I mean, is it possible that it's too bad and it's going down? Because, there's other things going on online here. You have the gold yuan coming online that you can buy, petrol with the gold yuan, and you can actually trade the gold yuan in for gold, or so it's being said. I think it's the 26th, if I'm correct.
Yeah, so, you're right.
So,
you're absolutely correct.
You are having there's other things going on in the background here as well. I shouldn't say background, but
Exactly. And it's impossible for me to say whether or not they can. They can't ultimately save the system, but what they can do is buy more time, like they bought this last decade since the last crash. I think they can certainly buy more time. But as far as saving this ultimate credit meltdown, no, I don't think it's designed to fail eventually. And but the fact that they will have to be forced to move in and save it tells me that they will do it. So there's just too much at stake. Another thing that I wanted to point out why you don't want to buy the dips of the stock market is not only are we looking at this potential Deutsche Bank insolvent news that I believe will come out within a couple of weeks, is the fact that we have nations around the world getting ready for a world war. I mean, you do not want to buy stocks during the time that war could break out. And this is another issue that is not being talked about, and they're not taking this into consideration. You've got the United States, you've got the Russia, you got China, you got Iran, you got Taiwan, you got Japan, you got the UK. They're all getting ready and stating very emphatically that they're going to go to war, and they plan on doing this relatively soon, right at the time that these issues are coming at hand. So I would not buy stocks for anything right now. I mean, it's like taking a financial death wish and jumping off of a cliff. There's absolutely no reason for anybody to be in that stock market now.
Let me run this through real quick while you're doing this. This whole ETF, I'm going to run through. Since this is a video, you can pause it and do it there. But we talked, I'm going to go to the screen now, talked about FAZ. And what I've put on is the long-term sign, the long-term graph that shows, we did this one already, that shows that it was up to 118,000 in the last crash, okay? And looking at in the last 5 days, you could see how it's starting to move upward. Now we're going to go on to the next one, which is VXX. Going back to, let's see, what was the peak? It was 118,000 in February of 2009. And you could see it went down as the market rose. But here is the last 5 days. You could see it starting its way up again. It's still affordable at $50 or $49. You know, it's still affordable. And this is the point of the show. Going back to DRV. If you want to pop in and say what these things are, what they're bet against while I'm announcing it, go ahead.
Yeah, the DRV bets on real estate, commercial real estate, I guess you'd call it individual real estate, any type of real estate.
And that one was 14. It's 14 now. But back in the day, right, it was 8,200. And again, looking in the last 5 days, again, you notice the trend upward. The other one I'm going to show here is SRS. The highest that it has been, I'm trying to read this, is that looks like about $8,000 back in the day. And it's now on its way up. So what is the SRS? Ultra short real estate?
Same thing. It just costs more per share. When I checked into the DRV and did a little investigation about it, I like that even more because the price is lower, and I believe it will go much higher than the other one. I think it will be DRV more in the 50,000 when you go backdate it to the 2009 era.
Right. So the next one I have here, I don't mean to be pushing through this, but I want to get this out there before anything happens. The TZA had a peak back in the day. I'm trying to see where it is. $25,000. It's currently 12. And again, looking at the last 5 days, you see the upward motion. What is the TZA?
The TZA will short all the Russell 2000 stocks. That encompasses a lot of your energy stocks as well.
And that you get right up in the corner, it says Russell 2000 is down 3%, and you can see the decline. All is NASDAQ, Dow, they're all up at top of this graph, and you can see the decline. We have the TVIX, and back in the day that was 22,000. And again, we don't go back far enough, so it might have been higher earlier, but that's what the graph shows in the max. Currently, in the last 5 days, you see the trend of it going upward. What is the TVIX?
That again controls the betting that the NASDAQ stocks will go down, which is your high-tech stocks, anything that's in the NASDAQ area.
Last one I have on here is the UVXY. And going back in the day, let me see, 35,000 a share. Currently it's 20. It has gone up 8% just yesterday, and here's the 5-day trend. And so I wanted to get these on the screen and say them and get you. And this is the, what is this? Is New York Stock Exchange shorting? Pro shares?
Yeah.
Okay. Just the point is, these are the things that I want to get out and say, if you have an account at Ameritrade or or whatever, buy these things. You could see their reasonable price. You could spend a couple $100 across the board, buy these things, and if it goes back remotely close to 2008, you're talking of hundreds of thousands to $1 million, which will come in handy when everything crashes. And it's insurance, so it's not a investment. But I just wanted to get that in. I didn't mean to cut you there, but continue what you were doing. We got that in, and we can move on. Just so I got that out there.
Yeah, even if a person doesn't have any money to invest in these particular high-risk, high-roller type of investments, just pulling your money out of the bank will put you back at ownership of your own hard work, okay? Because once you put it in the bank, the legal ownership is transferred over to the bank based upon the Dodd-Frank bill that they've implemented many years back. So always keep that in mind. If you put money in the bank, it doesn't belong to you legally.
That's very important, because when I've talked to people about it, they have no clue. And when I've talked to professionals, they do know that when you put money in the bank, you are giving the bank a non-secured loan to use your money. And that if the bank goes belly up or some problem, they can use your money to help their bottom line and give you essentially an IOU with no teeth. Whereas before they couldn't do that. Now they could do that. And if you want to wave around, well, what about the FDIC? Yeah, I'm putting up the chart here of the total savings that you had provided. That there is $9 trillion, is it, or $9 billion?
9,200,000,000 and some odd billion, based on Friday's last figure.
That's what's available in savings right now. And the two things to counter that would be how much is available in FDIC to cover this. Isn't it like $1 trillion, or?
Oh no. Try about maybe 60 billion.
Okay, 60 billion. Okay, I'll get that chart up while we're talking. And the other thing to look at is, of that 9 trillion, how the outstanding debt of the banks and the system. In fact, don't I have that somewhere here?
Yeah, that was that page 4 of that one document.
Okay. Yeah, here we go.
How corporate debt. Yeah.
Here it is. U.S. corporate debt outstanding. Oh, that's as percent of. Let me see if I can find that. U.S. corporate debt. Okay, I'm gonna kind of squint here. Is this in billions? Yeah. 900 billion. So we're talking about 9 trillion. I'm reading this right. That's just the corporate debt. Corporate debt, not bank debt or debt in general. That's the corporate debt. So you just see that you have the 900 trillion in savings and the 900 trillion in corporate debt. Now we're down to zero. And now we move on to talk about other debt. And that 60 billion in FDIC will evaporate in the first minute of a collapse. So this is why Lionel was talking about taking your money out, is that having it in your control, in your hands, both to buy food and also to negotiate in future situations. You'll have it in your hand. If it's in the bank, they'll have it, and it'll be gone.
Yeah, and just the legal ownership laws make it their money when you make a deposit. You are no longer a depositor. You are an unsecured creditor. by law. So, keep that in mind. I should also mention that the corporate debt is $2.5 trillion higher than it was at the high of the last collapse. So they've added at least that much.
Wow, I can see this now. We're looking at that chart. The last crash, the debt was in 500 and 700 billion. And so now you're adding, over 200 trillion. I mean, you're adding, $2 trillion to it. And boy,
and this is borrowed money that the corporations cannot pay back. So when this collapse occurs, they will be forced to be insolvent, just like the banks. Why the president, the previous president, and the present president elected not to address this issue? They just allowed this problem to continue and fester and get worse and worse and worse to the point where we are now looking at a major banking financial collapse around the world. And it's going to force the Federal Reserve and the central banks to do all over again what they had to do back in 2009, which is another quantitative easing, which is flood the markets with liquidity at a time that they're going to be losing not tens of trillions, but hundreds of trillions of dollars. This is staggering. What is going on behind the scenes with this buying on margin, and buying on borrowing, and borrow this, borrow. It's kind of disgusting that they had to do it, but it all comes down to one thing, and that was the greed of the bankers. They did not like the idea decades ago, and just loaning out to people that worked hard for their money so they could buy a house. They wanted to loosen up the banking regulations to be able to gamble with your deposited money. And later on, they changed the whole status of a depositor to an unsecured creditor, so they literally stole your deposits legally without even telling the people. So not only do they have the right to gamble with your money, but they now have the right to say it's their money to gamble with. This is how incredible this whole thing is. It's worse than a novel.
Now you know why there's such a push for gun control, because they see this crash happening, and they're going to want to confiscate stuff, and people are going to be armed to present it. It's not even about losing your Second Amendment rights. That's not the focus. The focus is get rid of the guns, because what's coming is going to be affected by those who could hold their own. So, I mean, it sounds, people listening might be, you guys are crazy. You guys are paranoid. I mean, it's not going to happen. I said, yeah, but it happened. Every single government in history has turned on its people. And the banking systems and financial system has collapsed, and all this stuff has happened. It's happening around the world right now, but people say, well, here, not in America. It's not going to happen here. They'll figure something out. And this is the problem is what people are saying in various ways is that it's going to be up to you how you handle things. So in Lionel's case, he's saying, this is how you can take your money out, one, and two, if you have some money to invest with, a little bit of money, you can buy some of these stocks to help protect you, and then, stock up on food and what have you. And this is where there's a big deal. This whole Congress, I just had it on there. They got, I'm sure this is being recorded, so I'm sure I'm going to talk about this earlier. I won't go into it, but they just put out a new bill banning assault weapons. And so the fine print in the assault weapon may define as any semi-automatic gun might be considered an assault weapon based on how they're describing it. So you can see why all these things are connected.
Yeah, those ETFs that I recommended are all connected, but it's connected on the downside, not on the upside, which will help reverse any losses of jobs that you might accrue in this next downturn. It's just a perfect little insurance for the poor man in case he loses his job in this next depression.
Yeah. Now that the idea is when you do own these stocks, and you do, or I keep saying stocks. I guess it's a share of a stock. I guess I don't know how to share of a fund. When you do,
I'll just call them electronic trading funds.
ETFs. Okay,
really what they call them.
When you do sell the ETFs, the money for the most part won't go in a bank. It'll go inside your like Ameritex system, and you could you want to get it out of there, and that's a little tricky. Can you put a minute or two on? I mean,
yeah. When you open an account at a brokerage, they open an account under your name, and all those so-called digits are typically just under your name. Whereas opposed to if you had to make a wire transfer from your brokerage back to your bank, and if you did that, then the ownership of all those digits would go over to the bank, and if you did it at the wrong time, then you would end up losing everything. So this is what I advocate that you do. Just keep it in the brokerage under your name, and if you want to move it anywhere, make sure it's another brokerage that isn't tied to a bank that is gambling with people's deposits. And you can go into U.S. Treasuries if you want. There is a way to transfer and just buy bonds, but I'm beginning to like the idea of just keeping it in the brokerage under your name. You could transfer it into a futures and options brokerage. Just don't gamble with it. Just keep it in there, because technically they cannot do anything with your account money. It is supposed to be in a zero-sum account under your name, and you just simply you can actually just keep it there.
Because they're not allowed to. When you put the money in your account under your name, they're not taking your money and investing it and making money on that. They're making money on the commissions that when you buy stocks and sell stocks, they're making money on the commissions in that area. They're not taking your money, but a bank is. The only thing a bank can do is take your money and invest it. That's how they make money. And so this is why, in a sense, you're suggesting this.
Yeah, and it's tricky, and I'm going on their word that they're not going to gamble on it. There is no law that allows them to do that, whereas banks, there is a law that states that they can gamble with your deposits. So I'm just going based upon what the written laws state and limitations are. In brokerages, they cannot gamble with your money, not without your consent. Whereas in banks, they can not only gamble with your money, but they're saying that it's their money now, so by law.
All right. So was there? Did we cover it? Because I was trying to hurry through this, not hurry, but I wanted to make sure all this stuff got out, and I thought I remember you saying something else you wanted to do.
Yeah, there is. I wanted to cover just quickly on the one chart on the national debt page where it gives you all the different breakdowns of debt. I wanted to cover just some important bullet points on that. And,
yeah, I have that up. I have it up now so that people can see this.
To kind of give you an idea of the debt, and I'll just go over it quickly. Like the personal debt is an accumulation of all of your mortgage debt, student loan debt, and credit card debt put together. And in this country, they're rammed it up to about $19 trillion. This is how much debt that people have. This is why I wanted to short the real estate market with the DRB ETF, electronic trading funds. with a $19 trillion loss, knowing now that the banks will go under, the real estate prices will plummet far more than ever before. And that's why I highly suggested that. It seems like they want to contribute more debt to the national debt, more so now than ever before, which has put a liability on every U.S. taxpayer that has climbed now to $173,000 and climbing. It's an incredible burden to put on every citizen. The interest on the national debt that the government has to pay out per year is $287 billion. This is another reason why they're going to want to go negative interest rates. They don't in the future because they don't want to pay out money. They want to collect it. But this bit of information really got to me. Under the medium income, as far as today, the average person makes $31,730. The medium income 18 years ago, in the year 2000, is almost exactly the same. It's still $31,000. Yet the medium new home price is $321,000, but the medium new home price back in 2000 was only $162,000. This is telling me that people are making the same amount of money that they did 18 years ago, but the price of homes have shot up almost doubled, which is breaking the middle class. At the same time that their manufacturing job figures is at 12 million, but the manufacturing jobs that we had in 2000 was clear up to above 17 million. We are losing the jobs, making less, and paying more for all these stocks, homes, and cars, and it is sucking the money out of the middle class. Now we're going to go into another Great Depression if Deutsche Bank does what I anticipate it will very shortly. You're going to have more automation coming online in this country. If companies are going to remain, alive, if they're going to keep their doors open, the job market will plummet. It's just bad news all along. Every way I look at these figures, according to this national debt, broken down in all these different little columns, it's telling me that the worker is being squeezed out and going to be replaced by automation here very shortly, especially in the manufacturing.
And with the advances,
I just wanted to bring that out.
With the advances of AI, you have the automation being smarter, if I can use the term, to be able to make decisions, which up until recently humans were needed to do that. And so, that actually adds another layer of. Yeah,
it's with a population of 327 million, according to this data on that national debt chart. There's only 121 million U.S. taxpayers. So that's telling me right there, your employment is only about a third. You only have 30% employed, while you have almost two-thirds, 66% unemployment. If you're going to count every baby, old person, retired, everything,
Right.
I'm just kind of throwing that out. But that's what those figures are telling me. If you have 121 million people working and you have a total of 327 million people in this country, you've got very few people working as opposed to how many exist. And with the manufacturing jobs depleting year over year, these figures are catastrophic, especially going into a depression. This is absolutely devastating. This is going to make the Great Depression look like child's play. do not want to go into a depression with these type of figures that I'm seeing on this page. This is going to destroy people's lives there. That's why I wanted to do this program, to provide a mechanism for them to fight back any way and every way that I know how. And that's why I wanted to do this program.
And I think people who are looking at things like Bitcoin as it is a new animal. Oops, wrong button. It is a new animal. It's not looked at in terms of what other things are. So you can't compare it to, say, gold, because it's a whole different thing. I go into the differences. But when you put it in the soup of liquidity and debt and survival, it follows the same things everything else does. You need to live, and if your money is in these gold and coins, Bitcoins and whatnot, that you don't need to live on it, well, you can let it ride and see what comes out on the other end. But if you need to live on stuff and you can't use Bitcoin at this point to go buy anything, in fact, if people who are selling something wouldn't want to take it because of the downward trend at the moment, I have a screen up showing in the last month it's down 16%. Of course, if you look at the whole year, if you look at the entire life of Bitcoin, you know, it went up to almost $20,000 from nothing. But we're not there. I mean, it's not. We're looking in the past, going, "Yeah, look how much it went up." But here we are today. Here is the last week, and you have this up and down. So, if you don't need to live on this money, then you can let it ride and see what happens. But this is what we're talking about. We're talking about liquidity will drive the prices down everywhere. And so that if you have money, keep it at home. That won't even hurt I mean, if you were to buy food, for example, you know, people talk about storing food and all that. That's fine because it may be hard to get. But in the initial part of this crash, the prices are going to drop in relation to the buying power. So you could store up while it's there, but you're taking a chance you can get it. If you're in Chicago, you're in the heart of Chicago, and a crash hits, you're in trouble because you're going to have millions of people looking to take your stuff, let's say, instead of starving or whatever, because the stores only can handle a couple days worth of material. So this is the idea. You don't know how bad it's going to be, but you do know you can do some simple things to help. One, and I should have a bullet point on the screen, but I don't. But one, take your cash out of the bank so it stays yours. And right now the interest rates are so low that even if you lose, say nothing happens. Let's just say we're wrong, right? So you took the money out of the bank for a little while, you put it back in. No harm done. If you're right, it could be the difference between having a percentage of your money or any of your money versus having all of your money. So we're talking about safety. You're talking about the past performance of Deutsche Bank giving an indication what happened with the last crash. It's reoccurring again. So now you're getting a warning sign. You're talking about these stocks, the ETFs, are starting to rise. The last time they took off was back in a crash. It went up very high versus the people who lost all their money in the stock market are great portions of it. So all we're talking about here is safety, being safe, talk about being conservative. We're talking about being conservative. Conserve your stuff. And in political terms, you could see why what they're doing. You're starting to come out and be not bashful and talking about showing the sign of the fist. Let me see if I can look this up. I'll run it through real quick. Sign of the fist, which goes back to the days of, let me get webpage. This goes back to the days of, the Soviets. Here's Michael Hogg putting his fist up there with his angry face. And then look at the various fists throughout history that I've shown in all of this. Actually, they cut some of them off. That's interesting. Here we go. Here's the various fists. There's Obama with his fist. Kerry with a fist. Bernie with a fist. Here's the Soviet fist. Here's Clinton fist. This is a fist from Holland back when they were the Communist Party in Holland. Here's the various other fists. Here's I can't think of his name now. I'm looking at his face. Gosh, Venezuela. Here he is with his fist and his red beret. So I mean, all this stuff's happening We have the fight to get people's guns, the law-abiding guns. Criminals can have guns. That's fine, but not the law-abiding citizens. You have you have these laws being passed. You have this huge budget being passed. Though I talked earlier about a potential workaround that Trump may be working on. So all these things are colliding together. So what Lionel was saying, and I appreciate, I would have known this stuff, right? So without you telling, at least me, I have some ways to prepare for a crash, right? And so I appreciate what you're doing, and the people listening could heed this advice very cheaply. Again, he doesn't make any money on this. This is not a scam. It's not trying to get you to buy into his newsletter or nothing like that. This is information from one person who has knowledge and is sharing it with the rest of us for the good of humanity. I mean, I don't want to get too corny here, but it's true. And I really appreciate you doing this, and I really hope the listener will heed your advice on various levels.
Yeah, even if they do nothing, just getting their money out of the bank will be a lifesaver for them. So just with this little bit of knowledge will help them by the time they will need to, if the worst case scenario happens, like I believe it will here very shortly, it will give them a heads up and a way up and the ability to stay up through this hard time I think we're going to be going through. So, yeah, that's all we can do is what we can for others around us, with what we have to do with, what we have to give. So that's what this is all about.
All right, so is there anything else that we missed here you want to say?
Just a quick note that the other book that I'm working on, I'm about 80% done, and I also predict this will be be turned into a movie someday in the future. So I'm really excited about that.
If we still have movies.
So just wanted to let you know, and anybody listening, I'm putting out another book eventually, and it'll probably come out sometime in the summer. So I'm really excited about it.
And it's holyvirus.com is the website for his book. Actually, it's not related to what we were talking about, but it does go into the origins of law and banking, which go back to Babylon. So, I mean, in a way, I guess, there is some aspects to that. But you can get the book on sale. We have a couple of videos online. The book, and I'm saying this because this is not, it's not related, meaning that that's not the reason we did the show, was to promote the book, because we promoted it the other day with Jeff Doherty, who was, he brought it up and gave a big thumbs up to the book, the guest we had. But just bringing it to the attention, and that you're coming up with a, I guess I would call it a novelized version of this. Would be the best way.
Yeah, it'll be it's more of a science fiction action novel. I've just kind of turned it into more of an entertainment venue book rather than a documentary on my findings. So it will be more of on the entertainment lines. The first book that I wrote, I'm practically all sold out. So I don't even promote that right now. So, but they can still get one if they need one. It's just that I'm almost out of them.
Now, I do want to mention, I'll give you guys out there, between me, you, and the Lamppost and Lion, a secret. If you go to Feet to the Fire Radio and click the old website, there is a way that you can get a discount on the book. And I'll leave it at that, because I don't want to promote this without, I mean, Lionel is doing it for the listeners, which I appreciate. And so if you're not willing to do all of that, then I'm not going to give out the information, frankly, because it's like, well, then too bad, he's doing this to help. And so, but anyway. All right, Lionel, we will, I'm glad everything worked out so we can get this information out. I will put this show up by itself, this interview, I should say, by itself, and I will replay it on the live show tonight, which is March 25th. so that it's in the live show and it's available by itself so that people can spread the word and help one another to see what's coming on.
You can I should say, you can title this Deutsche Bank, out of borrowed money and out of borrowed time.
Yeah. Yeah, and there we go. We got the last 5 days. You can see these stair-step drops, and it's at its historical low, at least the charts. So it's at $13. The last crash, it was at 16. So now it's lower than the last crash.
Yeah, not a good sign.
So how low can it go? If there is a crash, there's no, before when it crashed, it was at 119. It had some room to move, though $16 is pretty close to the bottom, the floor. We're already starting out, at 13. So,
yeah, if you want to know, just follow the chart on Lehman Brothers. It went from 1375 down to 0 within like a couple of days. That's where Deutsche Bank is right now. That's why I wanted to do this program.
I wonder if I can get that chart. Let's see if they have if their chart available. Oh, I'll just put it in the link because I don't want to just. I
know it's there because I found it.
Oh, here we go. Holy Moses!
Yeah.
Holy Moses! It is quite a bit of a drop.
Yeah, this is what happens.
I see. Here you go. Here's somebody who actually, I got to remember this. He actually charted how Deutsche Bank is Lehman's brother. Is Lehman's brothers, and how it isn't. Okay, so somebody's already drawing these comparisons and trying to come up with a way it, well, it is, but it isn't. So don't panic. I didn't read the articles. I don't want to assume that, but it just sounds like the article, the name of it. But okay, we will let you go, Lionel. I appreciate it again, and I will send you the link to this so you can pass around. And I recommend people pass this around to help people. Friends and family. You can put it on Facebook or whatever, but it's meant to actually be acted upon by people, and not meant to be some kind of a fight, because you're going to have the political pundits, the financial pundits go, no, this is not the case, blah, 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 and fine. But, and so, again, thank you for being here, Lionel.
Okay, thank you.